What is going on, guys? Today we're going to be talking about how you can kind of stay recession proof, or at least have income coming in. So again, this is just my game plan. This does not mean this is what you have to do. This is just what I've decided to do. This is kind of what I've already set up about 2 days ago. So I'm kind of doing the paperwork right now for the first, and then moving on second, third, and fourth. So I at least want to get 4 to 5 of these done this year, and I want to get these done quite quickly. I want to get the next one within about 2 to 3 months. So what am I talking about? So here's the thing. First off, let me describe kind of what happens when a recession hits. Now again, I do want to give a pre-warning. You are going to need a little bit of money to be able to invest, but again, I will share ways on how you can kind of get around that. So first thing, right, when a recession hits, what is the main thing? Right now, people, again, this is worldwide, but especially true in America, people live paycheck to paycheck. Don't get me wrong, I've literally done it once on accident too, and then I realized it, and I'm like, okay, let me get a month ahead, and then I just kept getting myself ahead. But, basically what happens is people live paycheck to paycheck, then they can't pay when a recession hits, because they were depending on this income, and it's always the best case scenario. The way I structure personally my budget is worst case scenario on income and highest case scenario on expenses, and then I need to make sure I at least have a decent gap to the point from income to expenses, from worst to best case. So what people do is, let's say they bring in $5,000 a month, somehow that $5,000, right, it's already gone. And then what else they do is they say, oh, but this month I get $1,000 bonus. So, for that month they're spending $6,000, yet theoretically they're only guaranteed $5,000. And then here's what happens: if that bonus does not come through, they've already spent that $6,000 before the money even comes in. And this is where a lot of credit card debt gets into place, and this is when people start digging themselves into holes because they don't know how to get out of it. So what happens then, obviously, when a recession hits, stuff like that becomes more occurrent over and over again. So people from, if they have let's say a $700,000 house, and I do want to exclude that this usually after a certain point of wealth, this does not happen. So you won't have people in $5 to $10 million homes moving down to $3 million homes. That's just not what happens. Trust me, they have more than enough money and assets to the point where they don't give a rat's ass, right? So for example, you got people in $700,000 homes that won't be able to afford it anymore, especially with the home market as crazy as it has been. People, are overbuying and everything. So a friend of mine, he works for a company, and he has a chance every single year to buy 100 shares, and then the company gives them 55 of those shares for free. This year, he has done that every other year. This year, he cannot afford it because he overbid on a home to the point, and yet he allowed them to basically stay in there for 6 months while paying the mortgage. And it was basically, and he's already living in a home, right, with his fiance, as well as he now has another home which he wants to use as a rental, but for 6 months it's tied up and he's basically just paying a mortgage because that's how crazy the market is. Now, what happens with the home prices as crazy as it is, houses go from 700 down to 500, right? Or people living in 7 go down to 500,000 homes. Now people from 5 go into that 300,000 homes, right? Now here's the thing, right? If you guys know, you can only purchase a home right around that $700,000 range, and then kind of what continued going from there, right? Am I gonna need to go into that 500? Hopefully not. I think I've set myself up well enough. But here's my strategy, at least for if a recession does occur. I'm not saying it's going to, I'm just preparing myself, and even if it doesn't, I can still make bank on this no matter what. So there are homes, right, within around, I would say, a very solid range. One, apartments are always a good thing. Apartments are decently cheap. You can get them for around 1 to 150. Depending on the area, you can do Texas, Arizona, Florida. Next thing, those are the areas that I'm personally sticking with. I don't want to go to any different places. Those are the 3 places that I feel comfortable sticking with my real estate budget. So next thing that you can then do is basically the $300,000 family homes, right? 300 to 400,000. Right now, Texas, to get a nice 3-bed, 2-bath in a well area, it's looking at around 400,000. I personally don't want to go into that, so I'm looking more at the $300,000 range, 3-bed, 2-bath, somewhere in around Arizona or different parts of Texas that aren't that well known yet as rentals. Now, here is my strategy as of the moment, right? Getting a 100, basically, let's just simple math, $150,000 apartment, 2-bed, 1-bath. So that cash flow right there, on average in the area that I'm doing the paperwork for right now, right, it basically brings in around $1,200 in rent per month, and then tenants pay utilities and all of that. Now, after that home, I did 20% down on it. If you guys can calculate it out, basically with all the fees and everything, it was right around that $35,000 range. Then, so that's money out of my pocket. Again, you can do less down. I didn't really want to because basically that place now with everything, fees and everything monthly and the mortgage cost me around $400. So that's really good news because basically $450, $1,200, so simple math, let's just say $800 cash in pocket that I can rake in, or it gives me that margin to basically say, okay, if people, right, if that rent becomes too high and people can't afford $1,200 for that anymore, I can downgrade it to $900. Guess what? I'm still $500 cash in pocket and I'm good to go. So I have a couple of options with those, right? Obviously, I split up 50-50. If you guys know how I do my rental properties, 50% of that I can put cash into my pocket, blow it on other stuff, or save it for the next thing, whatever I want to feel like doing, or blow it on my own lifestyle. The other 50% I always put aside just to be safe in that home, right? In case damages happen or anything like that. I just want to be safe and secure and not worry in case I put myself in a bad situation where there's one month like February where my spending was decently high due to multiple investments I made and fun trips I did. Thank you so much, Austria. Super fun. So I want to get one of those. Now here's the thing. Places like that I see within the next 5, 6, 7 years to appreciate. So that 150,000 I think can appreciate to around $250,000, if not 300,000. I would just go 250 because again I like lowballing. So let's say my 150 goes to 250. I want this year to get 4 places like that, just due to the cash I've set aside for real estate. I can do all of those with 20% down, all 4 of them, and I can get one about every 2 to 3 months. So again, set myself up very well there. Gotta test the first one, see rentals, everything. Gotta test the second for 2 to 3 months rentals. Okay, cool. So once I have that, basically all 4 of those theoretically would be bringing me in, if the numbers line up exactly the same, and again I could theoretically get it in the same apartment complex. I'm not going to do that because I want to diversify a little bit, again decreasing my risk. So next thing, if I have $800 a month cash flow, I do that times 4. Right now, $3,200 every single month by the end of this year that I kind of want cash in my pocket. Now that's also why I've been debating about the 5th one. If I really pushed myself this year, I could get it done as well. Again, $4,000 cash in pocket. Now, 4 of those, here's the reason I want 4. That 150, because within 6 to 7 years, if I take that $800 and just chuck it straight back in to those rentals, right, within about 5 to 6 years, I could have it all paid off. So again, right, we're gonna take out the nice handy dandy little calculator. Oh sweet, thank you, I just got paid for stuff. So $1,200, right, times 12 equals $14,400 per year. Times 6, that's basically $86,400. Now if I basically then at the end, here's kind of the way I do it usually when I get down to around 50,000, or at least my plan with this home that I'm currently in. Right now I owe on this home about 170,000 left. Once I get down to 50, writing a check and I'm done with this. Same exact strategy for all my rentals. Once it goes down to a certain number, just chuck that cash in, right? So that's why within 5 to 6 years, it's basically going to bring me in around $90,000. I did about 30,000, so then at that point, 20 to 30,000 would be left. But here's a beautiful thing: if I have 4 of them, they're going to increase in value to around that 250 mark, which I think is very doable. That basically leaves me $1 million that is completely paid off, completely in my name, that I can then continue to rent out, or that I can sell. And honestly, within that time frame, I might then hold on to it for about another 1 to 2 years, and then honestly sell it because I just feel more comfortable. Again, I'm more a stock person, not a real estate person at that point. So I would kind of move my assets, put those into crypto and stocks, because again, that's just more me. That's where I know a lot more about any of this stuff, and that's where I don't really need outside help. That's just kind of where I just need my computer and I'm good to go. So that is my game plan, right? Especially if I have 5, that increases it to 1.2. And again, that's all just within this year. This 1 year is setting myself up, and then 1 year of setting myself up, and then just waiting 5 to 6 years. And at that point, boom, millionaire status, all because of theoretically a $120,000 investment. Best part is you can partner it up. You can even decrease it. I don't have to do 20%. I can do 5%. I can do 10%, 15%, right? Since all investments, I can do 15. I can even use hard money lenders. I know some of them. And then at that point, I can do 5%. So I could theoretically get all 4 done within this month. Do I want to take that risk and have that leverage? No, I don't, because again, that decreases my monthly risk management, my monthly margin in a sense. So I don't want to do that. However, that is a strategy right now that I'm focusing on, as well as from yesterday's video, you guys saw my plan with the stock market, and then this right now is my plan with the real estate market. So that's kind of how it goes. If you guys want to see my crypto plan, go ahead and head over to my crypto channel. It's Crypto Nick, N-I-K. So thank you guys so much for watching. I hope you appreciate it, and I do apologize that I'm a little sick. I don't know why. Probably the weather here in Texas right now is super shitty. But anyways, thank you guys so much for watching. I will see you guys tomorrow with another video. Peace out, guys.